Hi all, my name is Zoran Kresovic and I'm one of the analysts here at Eightcap. Today I will be talking about and analyzing Aussie USD. I will start off with actually doing a small presentation for you, approximately 4 pages, looking at the macro picture first and talking about the fundamentals, what's driving the markets these days, and then obviously narrowing down into the technical side of things and looking at the chart so we can actually combine the best of both worlds and hopefully give you some food for thought moving into 2023. Okay, so let's get stuck into it. Macro outlook. So what's been driving the markets over the last 12 months? We've seen a lot of noise, a lot of news. We've also seen a lot of movement in the markets in general as well. So we've seen, everyone talking about the high inflation, and last night the Fed chair Jerome Powell actually came out with a statement. US interest rates have gone up 425 basis points since April up until today. So that's actually been an absolutely huge market moving for the past 6 to 8 months. And also, it's a talking point around the globe because right now, even with Jerome Powell, as I mentioned previously, coming out last night, he is actually talking about subdued inflation, a little bit easing off in the last couple of months, but nowhere near the benchmark of 2%, which is basically what they would like to see before easing off the interest rates. Okay, so what's driving the actual inflation over the last 12 months? That's a great question. So we've obviously seen a lot of challenges. We've seen a lot of global supply and demand disruptions, okay? Especially with regards to energy sector going up as well. So that's been affected by the, one of the things that actually affected that would be the Russia-Ukraine war, which is obviously having a massive issues in Europe and globally. But also another component to that is, at least to say China zero COVID-19 policy, which is obviously affecting the global supply and demand as well, because as we know, China is the biggest exporting nation. It's got its very close ties with US and exporting a lot, to the US and all around the globe. And with most recent policy and everything they've got going on over there, that's been heavily disrupted. I guess the positive on that is that over the last few days, there's been a fair bit of news coming out that China is actually easing off a little bit. So it looks like the things might be slowly opening up, and hopefully that's going to help the economy and inflation coming into the year 2023. So let's move on to the next slide. And what I've got here is actually inflation figures on the major countries or economies around the globe. Unfortunately, I haven't got Australia in there, which I should, so I do apologize for that. I should have included that. But as you can actually see, 2019, 2020, 2021, we've seen inflation move up, especially in the later part of 2020. COVID obviously had a massive effect around the globe. And what we're seeing actually in 2021 and 22 is actually inflation running very, very hot. Now, the outlook for the next 12 months is obviously, part of the reasons why the interest rates have gone up so much is actually we're trying to control that inflation and bring it down. So the question is, how much has it affected the US dollar? And how much has it actually affected the Aussie dollar? And I will actually talk about it in a little bit, and I will actually show, how it's all actually combined and played together when looking to the charts itself. Now, this chart, what I've got is actually real GDP growth projections for the year of 2022 and 23. And as you can see, the current numbers are running very, very hot. On the left-hand side in blue, and in red is the actual projections for the 2023. And you can see the growth component and the global growth component for each country appears to be to go down, and that is the projection. And the result for that is, the CPI inflation hopefully will come off, and the economies all around the globe will be able to manage appropriately. So, short-term drivers of Australian dollar and exchange rate. What's driving the Aussie dollar at the moment, and what are the main things that are actually affecting it? Okay, so one of them is obviously interest rates. So we've seen a number of interest rate rises in Aussie dollar since April, and that's obviously playing a big part into our economy locally here. And also it's playing a big part in movement Aussie in correlation to the US dollar as well. The other component would be considered as risk sentiment, so economic growth, as we are an exporting nation, Australia, and Aussie dollar is an exporting currency, just like Canadian dollar. There is that risk sentiment in carry trades that traders like to actually take into consideration when they actually looking at Aussie dollar versus US dollar. The very last component is obviously the speculative side of things. So short-term trading, trying to take full advantage of the market movements, volatility, and also hedging as well, because a lot of companies around the globe, a lot of companies here locally in Australia as well, like to hedge their positions as well and use Aussie dollar for that against US dollar too. So these are the major drivers that are actually affecting the economy. Obviously, we've seen global COVID lockdowns, supply chain disruptions. We've seen, a lot of cash handouts, bank fundings to encourage actually the housing sector as well. All this has actually played a massive role into the movements of US dollar and the rest of the currency and commodities around the globe. So what I would like to actually bring right now up is the USDX. USDX is US dollar versus a basket of top 8 currencies, major currencies, I should say, which include, just for educational purposes and for those people that are actually watching this and trying to get an educational component out of it, Aussie dollar, Canadian dollar, Swiss franc, Japanese yen, Great British pound, Canadian dollar, and so on. Okay, so it's the US dollar versus all the major currency pairs. As you can see, from the start of 2020 all the way up until the high or the peak in September 2022, we've seen a medium to long-term uptrend in the US dollar. Okay, the reason for that is, as I mentioned previously, is because of the interest rate rises in US, or the Fed has been actually lifting the rates quite aggressively to maintain and sustain the inflation. Okay, so we've seen the appreciation of US dollar quite strongly there, and what we've seen is quite an inverse relationship with the rest of the major currency pairs. We've seen basically the rest of the major currency pairs decline, and US dollar was actually very strong. Not only that, what we've also seen is the risk on, such as equities, come off quite a lot. We've also seen some of the commodities like silver and gold come off as well. So a lot of strength in US dollar over the past 12 months, I should say, and a lot of that flow is been going into that. Okay, now from the actual peak in September 2028 or end of September up until now, what we can see is actually a short-term downtrend in play, and we can see a clear downtrend channel here. And obviously the reason for that is we've actually heard a lot more from the Fed stating and commenting and saying things like, the interest rate rises might be working well. The inflationary figures are actually starting to ease off a little bit, and in the near future we might actually start tapering back and reducing the amount of interest rate rises, but also in terms of the per interest rise, how much we're actually lifting them, we might actually reduce that as well, because inflation might be peaking at the start of first quarter 2023, and we might see it actually start coming off. Now, obviously, that's been working quite negatively for the US dollar, and that's a sign for the market to basically start repositioning and reconsidering the movements. Now, what we can see obviously is the US dollar has been coming off, and we can see the appreciation in the rest of the major currency pairs, and I will go into the Aussie USD. Also, what we can see here right now as we actually speak, if I have a look at the last major range and if I have a look at the last few bars here, we are seeing a hold around 103.48 level. It's a strong support level here on the chart, and whilst it has broken the previous low, the current bar, and that would be considered as the movement of last night with Fed speech and Jerome Powell talking, we might hopefully be able to see actually some sort of consolidation here, okay? And then hopefully the markets actually can hold off, and we can, see some movement to the upside. What I've done also is actually apply the Fibonacci level. So if you have a look at it from the lowest or last 12 months, back in September 2021, from the low to the most recent all-time high, I've applied the Fibonacci level to see how much the market could potentially come down and retest if it was to reverse and actually continue to go upwards. And we can see the key level on the Fibonacci mark, which is the 50% of the all-time range, coinciding nicely with the natural level of support and resistance. And the markets are at that pivotal point right now. So for those that are trading the US dollar against the rest of the major currency pairs, USDXY is really good to actually consider and look at, because it gives you the holistic approach and it gives you the overall picture in terms of where the US dollar is going against the rest of the major currency pairs. Okay, hopefully that was helpful. Now, what I will actually do very lastly is what I was actually meaning to do, and what the reason is for me actually being here today, is look at the Aussie dollar versus the US dollar. I will start off on weekly chart, and generally speaking, when I do my personal analysis, I actually start off everything on monthly chart and then narrow down into the weekly, daily, and 4 hourly, or depending on your time frame and what you're actually trading and how you do your trading. Now, the reason why I've actually picked the weekly chart is because I want to actually have a look at the bigger time frame. So I actually want to have a look at it from the start of 2021, and we can see a clear long-term downtrend in play. Okay, so Aussie dollar is being weak against the US dollar since around 2021. Okay, what I've got here is two levels of major support and resistance level, and we could see a short-term bottom back in October 2022. It looks like actually Aussie defended that 62-cent level really well, and we can see a short-term uptrend in play now. Okay, that's coinciding really well with the actual resistance level at the moment, and we could see a bit of resistance around that 68 or 69 level mark, and it's also hitting the upper channel band of the downward channel here as well. Okay, so that's looking at the picture on the weekly chart. So what we can obviously see is we can see a long-term downtrend in play with a short-term uptrend at the moment. What I would like to do right now is actually apply the daily chart of Aussie USD. Okay, and also what I would like to do is actually add a Fibonacci level. I found Fibonacci levels actually quite important, as they demonstrate or give us an indication of where the markets are moving at any point in time. Okay, so what I've done is apply the Fibonacci from the most recent high back in April 2022, when Aussie dollar started coming off heavily, and used the B point as a low of 62 cents back in October 2022. Short-term uptrend is moving nicely, to the resistance level mark, and we can see the higher peaks and higher troughs in the move, but we have actually hit some resistance around 60, 68, 69 level mark. I've applied the Fibonacci to see, where is the 50% level of the major range that I'm actually looking at, and whether the market will actually find some confluence and whether it's actually going to peak here, and if the Aussie will actually reverse and come down before it starts retesting again. Based on my analysis here, as you can see, and everything we discussed today, obviously general in nature, it doesn't take personal financial situation into consideration. We are seeing a confluence again and market testing the 50% fib level from the last major range. So it will be interesting to see whether it can actually hold here, or if we fundamentally get more good news from the US stating that inflation is cooling off, CPI figures are coming positive, labor wage growth is working really well, then obviously there could be more signal for Aussie dollar to continue going upwards and testing that 71 to 72 level. However, if that is not the case, and Fed continues to actually aggressively push with the rates in the next quarter, first quarter of 2023, we might actually see Aussie halt and come back around 66.5, 66 level before retesting and hopefully pushing up to basically break that major level of resistance. So in terms of Aussie at the moment, as I mentioned, just to recap, we are clearly seeing a long-term downtrend in play. The sentiment, the global sentiment, and the story might be changing. As a result, we are seeing the rest of the major currency pairs appreciating. US dollar is starting to come off, but everything will depend on the inflation and the outlook for 2023. So I really hope you actually enjoyed this session. Hopefully, your trading has been going well as well. And if you do have any questions, don't hesitate to get in touch with us here at Eightcap, as we will be more than happy to help out and assist as much as we can. Thank you.